Knowing the expected result of a candlestick signal as well as a candlestick pattern allows investors to have a much stronger and more accurate assessment of what the market trends are going to do. As we can see, Friday, the Dow closed as a doji right on the T line. The doji has a very simple doji rule. The price is usually going to move in the direction how they open after a doji. This made the analysis for Monday morning's trading relatively simple. If it opened lower, they're trading below the T line, putting the markets in a downtrend. The fact that we woke up and saw the pre-market futures up approximately 300 points told us exactly what we should be doing, buying on positive trading after a doji. This allowed for entering trades immediately without having to wait for confirmation, as many other technical analytical processes do. It also illustrated that the doji gap up, which is your best friend, and reason we call it your best friend is because not only does this combination of a doji followed by a gap up produce an upward movement, but usually a very strong upward movement. This would have told us that the pattern that we were looking at, a J-hook pattern, wave 1, wave 2, wave 3, was starting because of this strong signal, giving us the potential wave 3 magnitude of this move right here. This allows for analyzing what you should be doing with your portfolio, making sure that any short positions that you had established get closed out if they're showing confirmed bullish signals. Our recommendation on NVTA today was based upon very simple candlestick analysis. The big belt hold signal of last week showed two indications. One, they took out a lot of the selling, which means any buying at that point has less sellers in the way. Your uptrend still has good upside potential. And two, notice where it closed above the T line. That little factor right there says the probabilities that you're still in an uptrend are extremely strong. Our recommendation today was based upon identifying that if it opened positive today, that we have a J-hook pattern set up, meaning wave 1 and wave 3 will be approximately the same, allowing us to kind of calculate our target was up here to the 200-day moving average. Knowing the factors of each signal, like a belt hold with bullish confirmation, and the fact that they couldn't close below the T line, and bullish confirmation would give us a pattern that we could recognize that not only would it have an uptrend, but a very strong uptrend. All these visual elements are seen because human nature works the same way time after time. If you always go on the basis that prices do not move based upon fundamentals, prices move based upon the perception of fundamentals, candlestick signals are your most powerful and accurate trend assessment tools. That'll be it. We'll see you in the chat rooms.